Space. I'm your host, Sierra Hoffman, and on today's call, we have Adam Parrish of A&D Acquisitions. So, Adam, thank you so much for being on the show today.
Yeah, thank you so much for having me.
As usual, I always like to start off by knowing more about your background. So, tell us what you did before and how you got into commercial real estate.
So I've always really been in real estate. My parents did it first, and I sort of went along the journey with them. I know you can listen to my mom's podcast that you also did with Sierra, and her story really begins in 2008 during the crash because she used to be a realtor, and when things crashed, she bought a property in North Carolina while the crash was really hit hard in Arizona, where she was a realtor, and they moved our entire family out to North Carolina to self-manage the property. So it's really thrown into the business and forcefully sent to the fields at a young age to work on that property for a while. At a young age, I
Nice.
just picked up trash probably when I was around 10 years old.
Wow,
And
that's
once I
pretty
got,
young.
trash isn't too difficult though. I mean, our properties were, they weren't awful properties. Surprisingly, like they were like C-class properties. They weren't D, they're C. And like for all the years that I was there, like by myself, or at least my brother was usually there too. We were landscaping, doing maintenance with some of the maintenance people. But surprisingly, we never got a car stolen or like got robbed or anything. And it was like it was a sketchy area somewhat, but maybe people are scared of us
Nice.
because we look so tough. I don't know. But
Yeah, so you got into it at a super young age because your mom, and for any listeners who are listening right now, if you haven't already, you can listen to his mom's episode. Her name is Lisa Parrish. You go into kind of her story there. So you got into this basically you're 10 years old, and then from there, take us to the next part of your story. What happened after that?
I would say next after that, I pretty much did stuff on the property, maintenance, until I was about 16 or 17. And then I never really liked maintenance. I didn't like having to do that dirty type of work. When I was about 16, 17, I went to my first Dave Lindell seminar. I think we flew out, I think the first one we went to was all the way in Boston. We went straight to Boston. That was definitely an interesting experience. Going to that, I learned more about like what really multifamily actually is. And there's other sides to it. There's the underwriting, due diligence, and everything else involved, asset management, like how you really need to, like how my parents were doing it wrong really with self-managing so many units for so long.
And, self-managing is a tough business for sure. And I know that Lisa on the podcast said she was doing that for quite a long time. And that kind of, you get to a point where you're stuck, right? You're not able to really scale anymore because if you're managing it yourself, well, all of your time is spent managing that property. How are you supposed to spend time acquiring more? And how are you going to have the time to manage the new ones that you've acquired, right? So it's really about
100%.
how can I scale from there?
Yeah, I mean, I'll take a little bit of credit for that because when they took me to that, I was thinking like, why are you guys like not scaling up? What are you guys doing? You've had 100 units for like 10 years.
So you went to the Dave Lindell, and then how did that experience transform your business from there?
My parents started having me underwrite new deals for them, and surprisingly, like obviously results may vary, but it was the very first deal that I ever underwrote that the numbers actually worked, and we ended up doing that deal. I know it usually takes like you ask anybody else, and it's still for me in newer deals takes like 50 deals to underwrite before like you find one that actually like really works. But for some reason that property worked. I gave it to my mom. I was like, oh, these numbers work. And obviously I wasn't like deep into underwriting at the time. It was just quick and dirty, just see if like the cash on cash works, ARR, IRR. And she's like, what? There's no way these work. And they did. And we ended up closing on it. And that was really the beginning of when the next stage of my parents, their real estate career really took off too, because that's when they really started to begin scaling up.
Nice. So you're the underwriter for the team then, is that right?
Pretty much. My parents don't really like to underwrite, and I happen to enjoy numbers somewhat and that type of field, and really getting into due diligence. And of course, our whole family is really deep into like going on the property all the time, asset
Mm-hmm.
management. That's really always been our thing, especially with our family spending so much time managing ourselves.
Nice. So are all of your properties then local to where you live, or are you guys spread out over different areas?
We are spread out over different areas. We try not to spread ourselves too thin. I think that's a big thing I wanted to talk about on the podcast too. Is there's like you want to have a diversity of markets, but you also don't want to spread yourself too thin. And there's the economies of scale in which you want to have. We don't like to buy like 10 units in one spot, and usually the only time we'll buy a small amount of units is if we already have a bunch of units there. Because if you buy like 10
Mm-hmm.
units just for like one thing would be the property management might be like 8 or 10% on a property that
Yeah.
small. But if you already have a portfolio and add to it and you have 100 plus units, it'll be closer to like 3 or 4%. Yeah, when we were in North Carolina, we basically just bought North Carolina. And recently, like a year or two ago, I moved back to Arizona,
Mm-hmm.
and I don't currently own anything in Arizona, though I'm building a lot of relationships here. It's
Mm-hmm.
mostly stuff we have stuff in North Carolina and Texas. That's where we've been doing everything. Yeah, as long as we go to our properties, I say like once a month, just go to check
Mm-hmm.
everything out. I mean, we have a property management company, so we don't have to go all the time, just to make sure that everything's kept up well, not micromanaging,
Mm-hmm.
just making sure everything's fine.
Nice. So you visit your properties about once a month, and tell us about what your portfolio looks like today. How many units do you have?
I have owned general partnership in a little over 1,100 units. Currently, with excluding properties that we've sold, it's 411 units. And those consist of Hickory, North Carolina, Dallas, Houston, and Waco, Texas.
And since you are the underwriter for the deal and you're looking at all these numbers every day, are you doing anything different as far as your underwriting goes for 2023? Because we know how much the markets have changed. Is that changed how you look at deals?
Yes, definitely. I'm much more conservative in my numbers. And I know there is a lot of data, there's metrics that show that things might be getting a little bit better. But I mean, in my personal opinion, I think certain data is a little bit manipulated. I think that I think we're definitely going into a recession. I think 2023, maybe towards the latter half of 2023, 2024, rates will go down, but I think that things will still be a little bit difficult over the next year. I think property prices will probably still go down. Lending is still difficult. We experienced it as a seller 6 months ago. Even a property we were selling for about, I think we tried to get like 11 million for it at the time, and then we had to slowly bring the price down. We were getting too
Mm-hmm.
greedy, and eventually we got under contract at like 8 million, so 3 million less.
Wow.
And
Yeah, it's a big
then
jump.
like, yeah, I think it was like a week before closing though, the buyers tried to renegotiate, and then we decided to keep it.
Oh,
But
okay.
yeah, we're experiencing it from both sides,
Yeah.
and I think sellers are still asking too much than what they
Mm-hmm.
should be able to get, because things really went up in like 2021, 22, and even just over the last 8, 10 years, it's been a fantastic market overall. So
Yeah.
I think it's never an awful time to get into real estate. I think it's the best thing you can get into,
Mm-hmm.
but that you have to be very conservative in how you do it and just be very careful with your numbers. And if you're investing as a limited partner, make sure you're investing with experienced operators who have done it for a while, or the
Mm-hmm.
people that have been doing it are at least with a sponsor who has experience and they're investing in emerging markets.
Yeah. And so you mentioned one deal where you were selling it and you decided not to, and you're holding on to that deal now. So how are you guys structuring things as far as what to sell, what to hold, especially, obviously we have limited partners or investors that have their money in the deal and they have certain expectations for when they're going to see their money come back. So are
Mm-hmm.
you doing anything differently And are you still able to kind of meet those timelines for the investor?
Yeah, I mean, even when we were about to sell for 8 million on the property we wanted to sell, we were still going to meet our investors' returns, but we just decided not to sell because the property was still running very well. It didn't. We were in a situation where we needed to sell. We just really wanted to because we could sell for so much equity. But we've really sold everything we wanted to sell over the past couple years, and now we're just
Mm-hmm.
holding on to everything, making sure everything is fine. Still looking for properties. I think it's important to stay in the game and constantly be making connections, networking, and
Mm-hmm.
underwriting new deals. I've been underwriting a lot of deals lately, and none of the numbers make any sense. But just staying in the game, and I might find something, and like
Mm-hmm.
there's lots of ways to get creative and find something out there. Whether it's you can get like seller financing, or you can assume a loan, but things get tricky there.
Mm-hmm.
But I would say staying in the game is important, and not having too high expectations of getting anything right now, just making the
Yeah.
connections.
So how many markets are you underwriting in currently?
North Carolina, Texas, and Arizona. And it's like specific markets would be like I live in Tucson, Arizona. So some specifically Tucson,
Mm-hmm.
Dallas, Texas, and like tertiary markets of Dallas and tertiary markets of Charlotte, North Carolina.
And so you mentioned, having a diverse portfolio, but also, not spreading yourself too thin. So what would you recommend for somebody who is kind of getting started right now, maybe doesn't know exactly which market they want to get into? Should they focus on one market at a time? Should they look at a couple simultaneously? What are your thoughts on that?
I would say probably like two markets, maybe not just one market in case you can find something somewhere else, but definitely limiting the
Mm-hmm.
amount of markets you have. There's a lot of relationships you have to build in a market. You have to find lenders. Local lenders are preferred because in certain markets, lenders that are from far away may not give you as good terms because they don't like the market. So local lenders, local brokers to actually find the deals, and other partners, capital raisers. So I would say like just a couple markets preferably. And if you can do your backyard as the market, that's definitely preferred, but it
Mm-hmm.
doesn't always work out that way. All the time, your backyard may not be the best market.
Nice. And so what are your big goals currently? You've got, about 1,100 units. What is kind of your long-term vision and your big why for wanting to expand your portfolio?
Well, I guess I'll start with my why. I would say my why would probably just be financial freedom. So, in case anything ever happens to my family, I can always be in a position where I would have the money to help out in certain ways. I'd say that would probably be my main why. And goals that I would have, I would think a solid goal would be 10,000 units one day. I think I'm still
Mm-hmm.
young. Like to get 10,000, but also spreading out into other types of industries or that are related to real estate. I want to open up a pub one day called Parrish Pub. So I'll
Nice.
open up a few of those, and we got a spot in South Carolina in Newberry where I might do that. Might get into the whiskey business too.
That's pretty cool. So is that like a passion of yours as well?
Yeah, recently whiskey. I've just been. I don't know. I don't even remember how I really got into whiskey. I know like lots of business people, like old fashions are their drink of choice, and I was like, it'd be
Yeah.
cool to own my own whiskey one day. So I've now been
Nice.
like researching whiskey, trying to drink it neat, straight, and trying to get used to it.
Yeah, that's awesome. And then you're looking to maybe become a pilot as well. Is that right?
Yeah,
Nice.
I think I started like a couple years ago. I have about 40 hours of flight time right now. Haven't had much time to really get to the later stages of getting it, but it's on my to-do
Nice.
list.
My husband wants to get his pilot license as well. He wants to be able to fly helicopters so we don't have to be stuck in traffic anymore.
It's definitely fun. I was basically forced into it my first time. My dad brought me to the airport, and I thought we were just
Hmm.
like gonna take a joyride or something. But then the pilot was like, all right, get in the driver's seat. And I didn't know anything about flying a plane. And obviously he was
Yeah.
helping me out because when you're in a plane like that, it was like a little small plane, you have the two yokes together so they can
Mm-hmm.
help me out. But I took the
Mm-hmm.
off the thing, flew it a little bit, and I have a fear of heights, but for some reason it's not as bad when you're actually flying the plane for some reason.
So you've talked about, where you have accomplished so far as your portfolio, where you want to go. Do you have any thoughts, any additional thoughts on, what we can expect to see in the market maybe in this upcoming year if we're heading into this recession?
Yeah, I mean, I wouldn't consider myself an expert in like the economy or anything, but I would say I think rates are going to go up a little bit more still. I'd say probably a few more basis points, a couple more percent. I would say in terms of underwriting, a few areas that I would be careful for would be like, for example, I see a lot of students with their terminal cap rate. They have their terminal cap rate too low projected because cap
Mm-hmm.
rates I think are going to definitely raise. They've been very low lately. So
Mm-hmm.
I would say that would be a big thing. Like if you have a 1960 vintage property in a C area and
Mm-hmm.
buy it at a 4 cap and expect it to sell it at, say, like a 4.5 cap, it's probably going to end up selling for a lot more.
So let's just say, on a 5-year hold, what should people be adding onto for their final cap rate? So if it's, say, like they're buying at a 5 cap right now, where should be the exit cap rate? Should they be doing it for like 6, or what are your thoughts?
I would probably underwrite at 6, and it depends on the market. Also, it depends on a lot of different things on what exactly you would set it at, and you might just be overpaying for it, and that might be why your
Mm-hmm.
cap rate is as low as it is now. So it
Mm-hmm.
really depends, but I just like to keep it closer to 5 or 6 for most of the properties I do. And then if it's like really bad, then maybe even like 7%.
Got it. All right. Well, the next thing that I want to kind of transition into is to do just a walkthrough of one of your deals. So maybe one that was maybe more difficult than others, and just kind of walk us through, how you got it, what you liked about it, what you didn't like, and maybe some challenges that you overcame.
So we have a 38 unit that we recently got about 6 months ago, and it was sent to us by High Country Capital Partners. So I'll give out a quick shout out to Alec Beardall. It's been fantastic to work with. He's always coming up with creative ideas for us to increase our NOI. So it's been great. We basically split asset management. He usually deals with the investors mostly. I'd say both of us still also help on the rest of the asset management for the property management company. So they were
Mm-hmm.
the deal sourcers. We split money raising, and this is the very first deal that me and my brother were able to sponsor together, so that we fully
Nice.
sponsored this deal. So yeah, that was fun.
Very cool.
Mm-hmm. So that's how we got the deal. It's a pretty interesting property. It's a 2021 build, so very
Mm-hmm.
very new. Not something we would usually buy. We usually buy like 1980s products. It's still value add though. The interesting about it is it has like an elevator. It was built by some guy who doesn't know anything about apartment complexes. I think he did hotels before, so
Yeah.
the elevator is exciting. Luckily, we budgeted beforehand because we knew there'd be issues with it breaking down all the time, and it has broken
Mm-hmm.
down. But we budgeted that
Yeah.
in, so it's not a big issue. But there's a lot of value add for sure. There's like a bunch of storage units that weren't being
Mm-hmm.
utilized. Like people were just storing their stuff for free, so we would give them some time to take out their stuff, or just like pay whatever. We would charge a little bit. I think maybe like $50 a storage unit. And
Mm-hmm.
where the office used to be, we transitioned that into an Airbnb. We moved the current office into a little tiny office we built in the hallway. Like we built a wall that wasn't being utilized as well as it should have been. So we turned the old office into a nice Airbnb which is perfect for the area because it's right next to the Texas State Fair. And the property is in Dallas, Texas. I don't know if I mentioned that. Dallas, Texas, right next to the Dallas State Fair. And the Dallas State Fair happens every October. So that's when the Airbnb will be mostly utilized. That's our first Airbnb. So it should be exciting to see how that goes.
Very cool. And so would you be thinking about doing more units as Airbnbs, or are you just going to stick with just the one?
We've definitely thought about it a lot more. I think it was at the last peak partnership event. I can't remember the guy's name, but he went up and he was talking about Airbnbs and implementing them into apartment complexes. And ever since then, we've had that idea that, I mean, it makes a lot of sense to just transition a few units at a time, like maybe like 5% of our units. And if the area makes sense to have an Airbnb, like it might be a nice touristy area, it's a lot more income than a regular apartment rent. It's just, you have to fill it a lot more.
Yeah, exactly. And so me and my husband, we've done Airbnbs just on the single family side. And so when we first got into multifamily, we were very highly interested in doing like smaller multifamily, maybe around 20 units or so, and kind of turning it into almost like a boutique hotel, doing like short-term rentals through it. And, I think that's still something that we're pretty interested in. We haven't started, looking into that yet, but that's definitely something that is probably going to be on the horizon soon. All right. Well, do you have any final words or a big piece of advice you'd give somebody who is new?
I'd shout out a couple of things. First, I'll shout out Ryan and Tyler Devereaux of Multifamily Mindset. I'll just shout them out real quick because they've been great. I love going to their events and Peak Partnership. And also something I like to touch on is a software company called Bright Investor. One of the co-founders, Donato Callahan, went on your show. He's one of the co-founders, and it's something that I'm an angel investor in. And I feel like it's something that should solve a problem a lot of new investors are having with the analysis paralysis. And the idea of it is real estate market research made simpler, giving investors peace of mind so they don't feel too scared or hesitant to take action. And the way that they do that is by visually representing data on an easy to read map. Like some of the data vendors that they have, some of the most reputable, well-known brands, such as AdamData.com, Rentometer, Bureau of Labor Statistics, Crimometer, Mashvisor, GreatSchools.org, and the U.S. Census Bureau. I think they're a very solid company. I'm excited about it.
Nice. So I'll definitely have a link to that in the show notes below. And you have your own podcast as well, right?
The Commercial Multifamily Lion's Den podcast.
Nice.
Check that out.
Well, thanks everybody for tuning in today. If you guys enjoyed today's show, please write us a 5-star review on Apple Podcasts or Spotify. Every review helps us to reach more and more people looking to get involved in commercial real estate.
Thank you so much for having me, Sierra.
Today's show was sponsored by Synergy Capital Investments. To download your free multifamily investment guide for beginners or to schedule a call to learn about our upcoming investment projects, go to thrivewithsynergy.com. That's thrivewithsynergy.com or click on the link below.